Hello and welcome back to Mining Network. I'm with Joe Battersill, the Chief Exec of Anglesey Mining. Joe, good to see you again.
Hi Peter, good to be with you again.
I was quite surprised. I wasn't expecting to see a Welsh mining story on the BBC a couple of weeks ago. Maybe just to kick things off, what was the origin behind that? What was the story? How did that start?
Yeah, look, I mean, it was a very pleasant surprise for us as well. I mean, it certainly wasn't commissioned by us, which I think some people may think. But no, I got a call from the BBC in that period between Christmas and New Year, and they said they were catching up on news flow that over the last month, and they'd come across the Northern Copper Zone release we put out, and I think it was covered by the North Wales Post a few days before Christmas. So. And sort of all those news providers sort of feed into each other. So yeah, look, they just gave us a call and we had a chat, and I wasn't asked for an interview or anything like that. But when I saw the news article, I was very impressed by the way they covered it. I mean, it was very comforting to get some positive commentary out of the local council and the local councillor. Who we speak to those guys pretty regularly to keep them in the loop as to what we're doing on the mountain. And obviously it's interesting seeing the interview with the locals on the street there, because one of the first things I did when I joined as chief exec was I went to town and met with the local the Amlwch Town Council, and told them what we wanted to do, and like a lot of investors who have followed the story for a long time, they turned around and they said, yeah, it all sounds really good, Joe, but we've heard it before. And so, we've got some work to do there in terms of being able to prove to these people that we mean what we say, and we think there's an economic development there, and we'll get it done. And when I've been with the company since August last year, we really sort of kicked off the work programs back on the mountain in November last year. So I mean, it's also November 21. So it's really been sort of just over 12 months of work, and we've spent money very judiciously, and we've got the project to a position now that we're very, very comfortable in pushing forward into the next sort of round of work program. So yeah, Peter, look, it's lovely to see that news article. Again, I think the cynics would say, oh, it's an article that the BBC sort of roll out once every 10 years, and along with metal price cycles, and maybe that's been the case, but I think I'd like to think that certainly my involvement and how we see the project internally, we're very confident that we'll push this thing forward and get it into a development position.
Just before we actually go into the project, or maybe a bit of an update since we last met in September, maybe for those less familiar with the story, just give us a bit of an overview as to what Parys Mountain is and what you've done in the last 12 months since you've joined the company. Yeah,
sure. No, good idea, Peter. So Parys Mountain's been around for a long, long time. I mean, first mining there was Bronze Age, and my understanding is there's you can copper mines, and similar to gold mines, they have their own sort of DNA, and you can fingerprint where copper's from. And my understanding is that there's some Bronze Age tools that have been found in Mongolia that have been the copper in those tools has been identified as coming from Parys Mountain, which is quite staggering. Then the Romans had a go, and then really, the bulk of the sort of the commercial mining was 18th and 19th century, when it was the biggest copper mine in the world. Not by today's standards, obviously, but it was a fair effort. It's a volcanogenic massive sulfide outcropping at surface, and the old timers, they just really mined the copper in the open pits, and they went underground on some high grade copper veins. And I mean, since then, production really stopped in sort of the late 1900s, early 20th century, sort of 1906, I think was the last commercial. And then it was just parked up, and a group of Canadian companies came back in the 60s, did a bit more exploration. They ran some geophysical surveys, did some drilling, and then basically discovered what we now know and what we're looking at, which is, there's two sort of sides to it. One is very much a classic VMS, which is high grade zinc, lead, silver with sort of trace copper and gold. and we've got about 7.5 million tons in that's grading sort of 7% zinc equivalent. And that's as a resource. That's an overall resource, so that's not sort of what we'd look to mine, but there'll be a much higher grade subset in that. And then on the to the west or to the east of those zones, there's a zone called the Northern Copper Zone. And the Northern Copper Zone was discovered in the late 60s, or sorry, early to mid 60s. Was drilled out in the late 60s, and the original resource estimate internally was over 30 million tons at just under 1% copper. And given the price of gold back in the 60s, I mean, they never assayed for gold on most of the holes, and they only sort of moderate assaying for silver and the other base metals. So we've got these two zones, and at the moment, the resource for the Northern Copper Zone is currently 9.5 million tons. I mean, it's been sort of high graded in terms of the last resource. So all of that gives us what we've got today. The company was originally founded and listed in 1988, 89 on the back of this engine zone and white rock zone, which is that high grade VMS deposit, and not looking at the Northern Copper Zone at all. So the company raised £6.5 million and got the permits to develop the mine. And so they sunk the shaft to 300 meters. They put in a kilometre of underground development on a 280 level, which was due to a discovery of another ore body down there, and they wanted to go out and sort of have a look at it. And they took a 2,000 ton bulk sample. They got a process plant was permitted. They built a pilot plant, processed the bulk sample, produced a concentrate, and sold the concentrate to Pasminco. So I sold 800 ton parcel of concentrate to Pasminco. So down at AYM mouth. So when I look at when I joined, we have a preliminary economic assessment, a PEA. Now, I looked at the data in that, and there are very few PEAs anywhere in the world where you'd have a 2,000 ton bulk sample processed to a plant. Most PEAs, in fact, most pre-feasibility studies and a lot of feasibility studies would still only have benchtop and small scale processing results. So there are certain aspects of Parys Mountain that are just way more advanced than maybe the company is historically promoted, but also it's certainly way more advanced than the market considers. So over the last 12 months, we did a round of drilling. It was 10 holes, 3,000 meters. It was really sort of a bit of infill drilling in the upper levels of this white rock and engine zone deposits, and primarily to give us some more material for metallurgical test work, and secondly, one of the other reasons was to give us a full suite of geotechnical information. The project's never really had a full geotechnical appraisal done, so we've had that done by Knight Piésold, which has given some very, very encouraging results. And also we were looking to just do a bit of infill drilling into some of the inferred material. So within the white rock and engine zone, we're currently sat at around sort of 78-79% indicated material. We just want to lift that into lift that to sort of 85-90% of indicated, just to give us more confidence in those near surface tons. So that's all been done, and the results have been very much as we expected. In fact, I think when I look at the resource, I think we've probably we had a couple of those 10 holes that didn't hit anything, which were really sort of holes right at the edge of the deposit. So in a way that's useful information because it gives you a delineation to the ore body. But the rest of the holes, I mean, I think it'd be fair to say they probably hit more overall mineralization than we were expecting. I mean, that doesn't mean it's going to be all mineable, but we were certainly very, very happy with the amount of sulfide that we saw. I mean, this is it's a pretty big system, and there's no shortage of metal in the system. Whether it's economically mineable, we'll find out over the course of the next 12 months. But that was very good. The met test work, we've sort of dallied a bit on that. I mean, we were hoping to have had that material off to the labs before Christmas. I'm hoping that will leave site in the next week or two. But on the basis of the information or the drilling we've done, we're updating the resource estimate. That's currently underway. We've taken a slightly different approach, which is we sort of blame Christmas a little bit for getting in the way, but we've done a lot more work on this resource than has historically been done. I mean, all the resource estimates in the past or since 2012 have been done by consultants. Now, I'm very much a firm believer that resource estimates certainly the interpretation should be done internally. I think your internal geologists live and breathe the resource and the understanding of it, so they're always going to have more the ability to understand it better. And through this process, we've actually identified a number of drill holes that weren't included within the previous resource estimate. So the shape's going to change slightly, but the volumes will change as well. And so that's off with our consultant at the moment to fine tune the wireframes and then go through the resource estimation process. So again, I'd like to have had that done before at the start of the year. It's probably going to be end of January now. But look, we're very excited about that, because that really is the trigger, Peter, for what then goes on in the rest of the year. We as part of a we haven't formally said we're doing a feasibility study. But for all intents and purposes, everything we're doing this year, would form part of a feasibility study at some point. And so, the resource estimate or the resource update is very important. That's going to give us a lot more confidence in the resource. The kilometre of development that was done back in 1989, 1990. Interestingly, they went through both ore bodies. They went through Engine Zone and White Rock. They've mapped it, so we've included all the mapping in the resource estimate. They drilled 130 drill holes from that level in the early 90s. And so the data density around that 280 level is, in my view, sufficient to actually upgrade that resource probably 50 meters either side of that development into measured. And from what does that mean to the layman? Well, you have three levels of confidence in a resource estimate. You have inferred, which is there's a drill hole there, shows some mineralization. How big is it? Don't know. Thumbs up. You kind of put a bit of science around it. Then you have indicated, which is the second level, and when you go into the mine planning estimate or mine planning stage, you can't create a reserve out of inferred, but you can out of indicated. And then measured is just even more confidence in that data. And when I look at this from a funding perspective, I've been in the industry long enough, I've been in the financing side of mining long enough that to get these things financed, you can't go, oh great, we've got a resource, let's get some funding and go and build this. You've got to demonstrate to the people who are getting the money off that they're going to get the money back. And so the best way you do that is to just increase the confidence in every aspect of what you need to do and what you need to prove. And so I look at our payback on this project is about 3 years. So fundamentally, I look at that from a finance perspective, and I think we need to have a minimum 3 years worth of measured resource, because that gives the funders the confidence that, well, worst case scenario, we're going to get our money back. And beyond that, you can then increase the level of measured when you're mining and doing your infill drilling and slope drilling when you're underground. So that's a really critical part of this next process. We get the resource update done, that feeds into the new mine optimization, and there will be some changes to the mine optimization. That's why you do it, to fine tune these things. The met test work will that's about 16 weeks or 14 to 16 weeks. And so by the time we've done the resource estimate, the mine optimization, the final metallurgical test work, we're in a position then where we're looking at getting preliminary engineering design work done on the tailings. When we're speaking to providers about that already, getting quotes for that. We've already had the original work done on the process plant. That was done for the PEA, and fundamentally there's not many changes to the process plant. It might get a bit bigger. The reason for the met test work is we're just doing a little bit of a trade off on the pre-concentrated side. We currently have a dense media separation route at the front end. We're doing this test work to demonstrate whether ore sorting is actually a better technology and better. And this met test work is costing less than £100,000, and the potential savings we get from getting the right outcome on the DMS is £1 to £2 million immediately. So on the design works, so it's a very high return kind of project to do and makes sense. And obviously in the background and a continuation of last year, we've done about 30% of the baseline work for the environmental studies, and we've formally kicked off the permitting process now. We have our first kickoff meeting with the Mineral Planning Authority and all the stakeholders, environmental stakeholders and archaeological heritage and everything. That's all in the next couple of weeks. And our expectation is from that they're going to tell us we need to do a complete environmental impact social assessment. So we've been working to that assumption for 12 months. So all of last year, we're about a third of the way through the expenditure on having an EISA complete. And so I think when you look at all those activities, you get to the end of this financial year, maybe first quarter of next year, and all of a sudden you've got all these aspects that feed into a feasibility study and give you a pretty good, a very firm view as to where you go with a financial investment decision. And the one bit that's really out of our hands is obviously the permitting. I hate being asked questions about how long is the permit going to take, because it could take 7 months, it could take 27 months. I mean, a lot of that's out of our hands. So all we can do is engage with the right people. The feedback we've had from everybody so far has been very, very supportive, both in terms of, we can potentially help clean up some of the legacy issues from this mine with modern technology. We can certainly provide a lot of real jobs and high-paying jobs in the region, we think ultimately the social benefits are going to be quite significant.
What are the next stages of the social license at the moment? Obviously, you said you've kickstarted that with the baseline studies. If any, what are the main concerns of the local and the local stakeholders around the area?
Yeah, no, that's a really good question, Peter. I mean, and we sponsored the Bull Bay Pro-Am golf tournament last year, and I think it's one of the best bits of social interaction we've had since I've joined the company. Because I mean, at the end of the golf day, it turned into a bit of a Q&A session with a lot of people that members of the golf club. And interestingly, one of the primary comments that was made to me was that there was a view that Anglesey Mining were going to go back onto Parys Mountain, and we were going to go back into the open pit, and we were going to mine the entire hill. And so I just sort of stood there and said, well, no, that's not what we're doing at all. I mean, everything we're doing is underground. So, from the golf club, I mean, from anywhere, I mean, you can see the mine from pretty much from the entirety of the town. What they'll see when this mine is up and running is pretty much what they see now. We're very proud of our ownership of the mountain. I mean, we own half of it freehold, and we lease the other half off the Marquess of Anglesey. We're very proud of that ownership, and we're very proud of making sure that it's available for public usage. And at no point will we remove that access to the mountain. We've with the local heritage group, we've put a bitumen car park in, and we've put walkways and paths around the mine, and long may they remain. I mean, we see ourselves as custodians of this project, and relatively short-term custodians in the bigger picture. And we just see ourselves as providing the next leg of the archaeological history of the extraction of copper from Parys Mountain. And I mean, it sounds cliche, but I mean that's generally how we view it internally. What do we see for the end of the mine life? Well, I think the end of them. I mean, currently the mine plan is for 12 years. I think we'll be there a lot longer, especially with this work we've done on the Northern Copper Zone that suggests it's going to be much bigger than it looks. And I think we look at it and say, well, where we've got the current shaft, where our site offices are, at the end of the mine life. I mean, yes, it's on the other side of the road to the mountain. That's part of the current heritage trail, but we'd look to include all of that as part of the heritage trail eventually as well. And keep the head frame there, and it's it's iconic on the island. So we're very proud of that, and will remain so.
Good. I just wanted to go back to Northern Copper on the east side, because obviously at the moment, from my understanding, the main mine plan that was conducted a while ago in the PEA was mostly on the polymetallic sort of copper zinc side of the project. Is that right?
Well, the PEA is about 11.4 million tons, which a million tons a year gives us this sort of 12 years with a ramp up. Obviously, you don't start at 1 million tons a year. Within that, it's 4.5 million tons comes from the Northern Copper Zone, which is less than 50% of the current resource. And when we look at the original resource from 1970, which was 36 million short tons, so about 32 million metric tons. What they've done is they've taken the higher grade chutes and they've just modeled these sort of quite narrow 20-meter wide chutes, whereas what we actually see in the Northern Copper Zone is not 20 meters wide, it's 100 meters wide, or between 75 and 100 meters wide. And yes, it's lower grade and it gets more disseminated, whatever. But from a bulk mining perspective, you could certainly look at options to increase the tonnage outputs per day from that Northern Copper Zone once you're over there. And this is where we see the real optionality, and this mine optimization process, Peter, is going to be really, really valuable for us, because at the moment, the mine plan is we decline down from where the offices are on the hill. We decline down into the engine zone and White Rock. We mine those. We mine just those for the first 3 years, and then at the end of the fourth year, or through the duration of year 4, we cross-cut into the Northern Copper Zone and we start mining the Northern Copper Zone. So really, the Northern Copper Zone in the current mine plan in the PEA, the Northern Copper Zone comes into play year 4. So my view is that at the moment, the entirety of that Northern Copper Zone is inferred resources, which is not ideal from a mine plan perspective. So, but it doesn't worry me, because we've got enough data there. Our internal review of it is sufficient. We're pretty confident that we're going to probably find more there.
Well, this was my point, really. I mean, obviously, you have what's already a substantial mine that can go into production that should be economic, or that you'll find out for sure within the next 12 months of the work plan. But I'm just trying to work out in my head how much more potential is there for this mine to grow, especially in Northern Copper Zone.
But we're thinking the same. We're sort of looking at this in the same way, and I mean, there's a lot of work to do, obviously. But the way I look at it is that we've got, let's say, I'll probably get crucified for this. Let's say the permitting and the next study phase takes 12 to 15 months. After that, it's about a 12-month development timeline. So production could be within that sort of time frame. You then have 3.5 years before you get into the Northern Copper Zone. So just on that timeline alone, you've got 5 years before you need to have finalised the design on the Northern Copper Zone. In the interim, those first 3.5-4 years of production are, based on the numbers we see, are very economic. Based on the PEA, are very economic, and gives you still get a payback after 3.5 years once you're into production. So how big could the Northern Copper Zone be? Well, even if we come out with a resource that was the same as the one in the 70 or in 1970, 32 million tons. How do you mine that? Well, you certainly wouldn't mine it under the same mine design we've currently got, which is 20-meter wide stopes. You're probably going to push it out to 50, 60-meter wide stopes, which is going to increase your mine production rate, and you could end up with a much larger copper production profile out of the Northern Copper Zone than we currently model. I mean, the way I look at this, Peter, is that we've got, within that PEA, we had 2 mine plans. There was one which was just mining Engine Zone and White Rock. That was a low capital startup. It was I think $60 million, 10-year mine life. It made money. I need to review the document, but I think the internal rate of return was sort of low 20s, so it wasn't great. But that was under sort of using $2.80 copper price and $1.05 or $1.20 zinc, and some very, very, very conservative commodity prices. I kind of look at that as the worst case scenario, that we develop the White Rock and Engine Zones, and that's all you mine here, which is so hard to fathom as being what the actual outcome will be, given what we know about the project. But it's really okay. Well, let's get into that. And we'll have the right information. We'll have the right confidence, and within that timeline as well, we'll have a much better view as to just what the Northern Copper Zone can contribute.
So, just on the permitting side, obviously White Rock and Engine Zone, compared to the Northern Copper, are these permitted separately, or are you filing a permit for both at the same time?
No, we've got the current permits that we have, which were from 1989, there's a surface outline that's given, but that surface outline is real. The outline of the permitted area is for surface activities, so it doesn't really include underground activities. But for all intents and purposes, as part of this review of the permits that we're doing, we are looking to extend that permit area just to cover all, everything that's underground as well. I mean, our view, and really, I mean, the primary reason for that is because you're going to need to put a vent shaft in to get into, to mine the Northern Copper Zone. And so I'd rather have it all contained within an existing permit rather than try and apply for small outlier permits later. It just makes sense. And so, the interaction we've had with the Mineral Planning Authority is, look, tell us what you want now, and let's just work on that premise from day one. So I think, they've been very encouraging in what they've said.
Before we move on to the iron ore, I know you can't give an exact timeline as to when things will develop this year, but the updated resource, that is expected fairly soon, isn't it? And that should give people a pretty good overview as to what this project's looking like and really where you go from there, right?
But look, I'm super conscious as a former observer of this company. I'm super conscious that the promotion of the company was always, this time next year we'll be in production, or we'll be commencing construction for production. And I'm not saying that was the wrong thing to say. I mean, all of that always came down to whether they get the right funding, whether they could get the funding. I think subsequently we've done a bit more work on the project to really sort of demonstrate that there is merit, and there's strong merit to this project being developed, both economically and socially, and environmentally, I would add, because as I said, there are certain elements of the current Parys Mountain mine site that are almost like toxic waste ponds that have been there for 200 years. Part of our tailing strategy is that we can clean all that up. So we look at it very positively in that regard. Was my predecessor in a position to be able to say the same thing? Probably not. And that's just because we've done a bit more work. So look, I think we're in a position that once we get the resource update through, that really is the key that then feeds into all these other processes. And I've said this since I joined. I've got a lot of confidence in Parys Mountain. When I first started, I thought there was 95% chance of it being developed as mine. I now think it's 99% chance, and that's because I've seen all the information, all the results we've generated in that timeline have confirmed what I thought initially. And I think this next resource is just going to add to people's confidence.
Okay. Let's move on. Obviously, very recently you announced a further increase in stake in the Grangersburg project in Scandinavia. Yeah. First of all, tell us a bit about this project. Why is it strategic for the company?
Yeah, look, I mean, in a way, I mean, Grangersburg and Parys Mountain are very similar stories in that they're former operations that have generated a lot of wealth for the region that they're in, and they're closed for economic conditions at the time, prevailing economic conditions. What we like about Grangersburg is it's when it was in operation, and I mean it produced 180 million tons of iron ore over about 100 years, and stopped in 1989 when the iron ore price was $27 a ton. So since then, very little has been done to the project. I mean, our partners that we've just bought out, Rosslagen, they pegged the tenements, or they pegged the project and put it through a very robust pre-feasibility study in 2012. And I mean, I say robust, I mean, in a way, again, very similar to Parys Mountain, it's a pre-feasibility study that is based on information from a mine that was operating for 100 years. So we've got no questions over the resource. We've got no questions over the metallurgy. We've got no questions over, infrastructure. I mean, it's all still there. So, we've got two projects that have got very good resource base, that have got existing infrastructure, were previously permitted, and the locals understand the economic benefits and the social benefits that came from these projects. So, I look at those and think, well, that, so there is some similarities. I mean, there's a big difference in terms of the capital. Parys Mountain is 100 million and Grangersburg is 400 million. So, there's, that's something, that's a bridge we'll cross in some way, shape or form as we go on. But to increase our ownership in this project to us was a very, very simple decision. Now, there's been a lot of confusion out there about the ownership structure has been quite confusing with Grangersburg, which is a function of how it was, or when it was acquired, which was through a refinancing and reorganization. So basically, the company Grangersburg Iron AB, which is a Swedish private company, is effectively went into administration, and so Anglesey came in as part of that reorganization in 2014. So from day one, the company had a very small stake, in the company in GIAB, but had control. We've had 3 members of a 5-man board since 2014. The original stake was 6%, and over the course of from 2014 through to now, we've continued to fund the company, and we've contributed capital into the company, just year to year running costs, and our partner Ross Lagan chose not to put money in, so they've diluted down. We've increased up to 20%. And this transaction we announced last week was us buying their last shares in GIAB, which was 28.9%, 29.8%. Sorry, numbers are made. It's Sunday.
But essentially, it brings you up to 49.75, right? So
we're now at 49.75. We still have control, and we have a right of first refusal over the last 50.25%. And again, in the same way that we've been very consistent in our commentary about this, about we want to consolidate this project within the Anglesey structure. Once we get to 100%, it then gives us the ability to review what all the options are, whether we keep it in Anglesey, whether we spin it out, whether we sell it, whether we option it. We at that point we can do whatever we want with it, right? I mean, we have complete control. And we can decide the direction we take it. And again, we've been very consistent in our commentary that we know there's a lot of work to do on Grangersburg. We know that there's a bit of time. It's not a quick route to production. It's 4 years. The longest lead item on that is the similar to Parys Mountain. It's the environmental impact social assessment. Encouragingly, with Grangersburg, we already have the mining concession. That was granted in 2013 after the feasibility or pre-feas was done, and that's valid for 25 years, and it's extendable in 10-year blocks at the end of that 25 years. So we're totally relaxed about that. And also within the application you have to make to get the mining concession in Sweden, you have to do like a preliminary environmental impact, which sort of highlights what the main risks are. So that's been accepted. The fact that we've got the mining concession, that was already accepted. So really, the longest lead item is then going in and doing the complete environmental impact and social assessment. We've got to dewater the mine as well. I mean, in our schedule, we have 18 months of dewatering. Could we do that quicker? Maybe. We could have some discussions with the agency, the water agency, and fundamentally, there's nothing really nasty in the water. I mean, the water comes from the groundwater in the mine, which is what's in the local lakes, and we're just basically recycling it. So, we're fairly relaxed about that. But obviously, we don't. Anglesey Mining doesn't have the ability to raise £400 million or $400 million today to take this project forward. So, what do we want to do? Well, we want to, on the back of our update of the pre-feasibility study that was done in July last year. There's some simple little things need to be done. We need to update the resource and the reserve, which once we commit to that is sort of 3-4 months work maybe, and that's just bringing it up to modern standards. And why do we need to do that? Well, if we want to get a partner in, or if we wanted to list it separately, or if we wanted to backdoor it into a company or whatever, and I'm just throwing all options out there. Then to have all that information at a standard and quality that you could drop into a prospectus, why wouldn't you do that? And so look, I mean, we're very positive about it. So back to your original point about why do we see it so strategic? Well, it's 150 million tons of resource as we've currently got defined. It's open at depth, so that will extend. The reserve is 82 million tons, so 16-year life. I was on site last year. It was almost a year ago now. Very sadly, that when I was on site the day that the Russians invaded Ukraine, and that changed the dynamics of this project for the next 2 generations, in my view. When you look at the European steel industry, it consumes about 60 million tons of iron ore a year, of which 20 million ton historically came from Ukraine, and 20 million tons came from Russia, and the other 20 comes from Sweden. I just don't think the Russian material is going to be around for the next generation. So all of a sudden, Grangersburg became a very, very strategic asset, and it's such high quality. It's the concentrate is 70%. There are very few operations in the world that can generate 70% concentrate, and as part of this decarbonisation of the steel industry, higher grade ore going into DRI type plants reduces the carbon emissions of that end product. And the other thing that sort of hopefully working in our favour is that Sweden leads the world, in my view, on green steel. With hybrid that's now operating. Excuse me. I mean, the more recent one is Blaster, that's talking about I think 2.5 to 4 million tons of green steel up in Scandinavia. Look, I mean, to me, it's the future of European steel is green steel from Scandinavia. So having some chips in that game, I think, Peter, is good for Anglesey shareholders.
No, I completely agree. The 50.25% that's left, obviously your aspirations are to own this entirely. Who owns that other portion at the moment? What agreements or what routes could you take to potentially acquire it?
Well, look, I mean, I don't want to say it's fairly simple, but we see it as fairly simple. I mean, the right of first refusal is so when the company acquired the original stake back in 2014, Anglesey didn't have the money to buy all the stake it wanted to. So it found an investor who put in $1.75 million to help fund the acquisition of this 50.25% stake. So that sits in a special purpose vehicle that we have 2 members of the board, and the investor has the other seat on that board. So I mean, we can. It's a negotiation ultimately, Peter. It's a negotiation, but we're fairly confident that that's something we can manage in the course of the next few months.
Okay, brilliant. Just lastly, just want to touch on Labrador Iron Ore. You still own 12%. Yeah. Any updates on the operations over there, development progress, and any changes in your stance on what you'd like to do with that 12%?
No, in terms of my stance, no, and like in terms of update, I mean, really, I can only push you towards or push investors towards the announcements that Labrador have made. I mean, I view the Labrador asset very much as I view the Grangersburg asset in terms of quality. And when you look at all the assets within the Anglesey stable, if you include Labrador within that stable, it's probably could be the first one into production. So the optionality around that for Anglesey shareholders, I think, is really, really very strong. I mean, especially when you consider what happened to Labrador's share price last time they got into production. I mean, the stock was $700-800 million market cap. So there's again, it's having chips in the game, right? And in terms of the quality of the product, I mean, I view that very similar to Grangersburg. It's not quite as high grade, but it's in a different part of the world. That it's shortening supply chains, high grade material, plus 62%. This is the direction of travel for the iron ore and the steel industry going forward. I think having product that's plus 60% and plus 62%, I think it's very hard to go wrong with that, to be honest with you. And there's other groups that are active, both in Scandinavia and the Labrador Trough, which demonstrates that there's a lot of interest in these theatres of iron ore production. So look, I mean, we're fairly relaxed. I mean, these things might not happen quick enough for some investors, but you've got to do these things at the pace that you can, and we're fairly relaxed about how we're going with them at the moment.
Okay, just one last question, and it's really based on value and sort of where investors are are looking at you? Because obviously you've got, I think we mentioned this when we spoke in September as well. Obviously you've got around approximately 2 million worth of value in the 12% that you own of Labrador Iron Ore. You have
in dollars, yeah.
In dollars.
2 million, yeah.
You then have Grangersburg, which hosts very high grade iron ore, very strategic location, 150 million tons. I mean, it's extremely robust. And then you have Anglesey, which is really building momentum. Yet obviously Anglesey as a company is still valued at around 6.3 million pounds. Obviously, I know it's only been a year since you've been there, but where's the disconnect? Because there's a lot of value in the ground, and is it your predecessors? Is it markets? What is there a catalyst coming up that you think is going to change these things? Where are we at the moment? What's your view on all of this?
Geez, that's like asking the question, what's the meaning of life, Peter? No, look, I mean, do I get frustrated on a day-to-day basis? Do I get frustrated about our market cap? Yeah, of course I do. Is there one particular thing we could do to change that? No, I don't think so. I think, this, unfortunately, and I knew this when I joined. Unfortunately, when you talk to investors, this company's got a history of talking and not doing, which I think has been unfair, especially given the success of Labrador when they went to Canada and spanned that out. I mean, that was they turned it in from a suite of tenements into a 2 million ton per year iron ore producer. So I mean, that was very successful. However, there's a legacy there. There's a very stale retail shareholder base that I imagine some people are in this stock at much higher levels. So what can we do? Well, look, I mean, we've just got to demonstrate that we are pushing these things forward, and we're not just talking about them. We're active in the projects, which we are, and then we've just got to do what we say we're going to do. And I think ultimately, the share price will look after itself. Are there things we could do to Parys Mountain differently? Well, it comes down to money, doesn't it? I mean, if we had more money in the bank, you could do things quicker. But would you necessarily do things better? I've seen companies with lots of money in the bank that still try and rush things and mess them up. So we want to make sure that I see myself as having one go at this, and I want to do it properly. And so certainly with Parys Mountain, I don't want to get to a point where we have to speak to the local council again, or not speak to the local council and not speak to locals in the area and just sort of go quiet again for 5 years. I don't want that to be the case. I want people to know that everything we're doing here is to bring this thing to fruition. So yes, I do get frustrated. Do I think we're worth more? Well, I wouldn't be doing my job if I didn't say, look, I think we're probably the cheapest exposure to copper and iron ore in the London market by multiples. I mean, I can, if anybody's interested and wants to contact me, I can give them a list of comps in the iron ore space and the copper space that would demonstrate such.
No, I'd be inclined to agree. Joe Badshill, thank you for your time.
Peter, pleasure. Thank you very much for your time.